Good morning. I'll be explaining the case of Supreme Court judgment of Mohit Private Limited. And before starting, I just want to make one thing very clear that I will not be using any technical language or providing you multiple technical references. I will make sure that only the bare minimalistic whatsoever is required I'll be mentioning over here. As you can see in the first page itself, I have given a disclosure just for us, so that even you know what you're getting into. And I've added the GST reference, GST Act references, Custom Act references, and when was the Supreme Court judgment date, and when was the administrative clarity provided. Like what was this is just some few technical part before starting. Before getting into, I will just give you a reference. Like these are the areas which from which the entire Mohit case is being structured, and the last component, like this one, the administrative clarity, this is with respect to post Mohit case. We'll start with the very basic. That is first we'll start with the basic case. Now there are three parties involved. One is the importer, and again next party is the exporter, and the third party is the transporter. Now the person who is importing the goods is located in India, and the exporter is outside India. Now, for this particular case, let us have an example. Let us have a rough example that the importer is located in Tamil Nadu and the exporter is located in USA, and the transporter is located in USA. There are three parties involved, and this entire transaction, it's like import of goods. The importer will place an order, the exporter will be sending the goods, and the exporter will be using the help of this transporter, and the entire movement will be done via ship. So that means ocean transport is being referred here. Now we know the number of parties now. Like first party is the importer, second party is the exporter, and there's one more party from whose help the goods are being moved from exporter's location to the importer's place. Now we'll move to the next part. In customs, there are three concepts. One is CIF, one second one is CF, and the third one is FOB. Anyone in India who is importing goods, he cannot get those goods directly into his location. His location is not possible. So every time whenever goods come from outside India to India, the goods has to be cleared via customs. Now, while clearing customs, in that particular bill of entry, the importer has to mention that this particular import has been done via CIF, CF, or FOB. Now, let us understand what is CIF, what is CF, and what is FOB. In case, whenever the importer is importing goods, and the importer will be making a payment to that exporter, in case where the importer is just paying the cost, let's take he's importing goods which is worth 1,000 rupees. In case the importer is just only paying 1,000 rupees, no, nothing much, in that case that particular freight is being done via FOB basis. In case the importer pays the cost plus the transportation charges plus the insurance. In that case, the importer pays the cost plus insurance plus freight. In that case, it is covered under CIF. In case he just pays the cost and the freight. In this case, it is covered under CF basis, or just cost, then it is covered under FOB basis. We will understand that why I'm trying to explain what is CIF, what is CF, what is CF basis, what is FOB basis. We will get to that point. So as of now, we know this particular transaction is import of goods. We import goods from a foreign country. Let's take USA. We are importing, let's take 1,000 pencils from USA to India. And while the goods are moved from USA to India, the movement is done by a ship, that is via in ocean route. This particular transportation is being done, and once the goods reaches India, there is a mandatory check in customs, that goods are first to be inspected in customs, and then from there it will be cleared. Once post clearing, these goods are again further, the transportation, the goods are further, then it is sent to the importer's location. And for the purpose of clearing, like before, once the goods enter in the custom port, the importer has to file a bill of entry, and the bill of entry, he has to mention, like, on like whatsoever payment the importer is doing to the exporter, to what extent. Like, is the importer only paying for the 1,000 pencils? If yes, then he has to mention FOB basis. If the importer is paying for 1,000 pencils plus the freight amount, in that case he has to mention CF basis. In case he is paying the the cost of 1,000 pencils plus the insurance plus the freight, in that case he has to mention CIF basis. Why this is important? Because let's take 1,000 rupees is the cost of the pencil, and 100 rupees is the transportation charges, and 100 rupees is insurance. In this case, this comes to 1,200 rupees, because whatsoever is the final value, this value is known as the assessable value as per customs. Based on this value, customs will be charging the basic custom duty and SWS, etc., other levies, and on whatsoever is the total amount, on that value IGST will be charged at a certain percentage. Let's take 18% or 5% or 12%. It's just an example bus. Now let's take, till here you have understood that it is now this particular case is regarding import of goods via ocean, and there are three types of clearance options. One is CIF, one is CF, one is FOB. Now let us understand, in primary in India, in GST there are two concepts. One is FCM, one is RCM. Now many of you will be knowing what is FCM. Let's take an example. You're going to buy a product. You're going to buy a particular product. Now you will be paying rupees 100 for the product, plus you will be paying GST. In this case, the total value is 118 rupees. Now, in out of your pocket, you have remitted 118 rupees to the shop. Now let's take the next mechanism, that is reverse charge mechanism. It's the same transaction. You just go to a shop. Example, this is a rough example, not being very specific with respect to the professions. You go to a shop, you buy a product. In this particular case, you just pay rupees 100, and whatsoever the tax component, you directly make the payment to the government, that is rupees 18 rupees. Now this is known as reverse charge mechanism. Now this is known as forward charge mechanism. So now starting with the main component, which was the exact issue in the case of Mohit minerals. Now what is happening, whenever the goods are imported in CIF basis, the importer is paying cost, insurance, freight, and the whatsoever the custom duty on the total he's paying IGST. IGST is nothing but GST component. IGST is nothing but the GST component. Now, in a way, let's take 100 rupees is the total IGST component. Now, in a way, it is now this 100 rupees is arrived from a percentage from the cost, a percentage from the insurance, a percentage from the freight amount, a percentage from the customs amount. So, and now in case of RCM, there are multiple notifications which specifies, like there are list of entries on which you have to pay RCM. Now let's take, you're going to buy a mobile phone. In that case, if that particular transaction is covered in the notification, you have to pay by reverse charge mechanism. Here, if not, automatically that a particular transaction will be covered under forward charge mechanism. So whenever the mobile phone owner shop, that guy will raise you a bill. In that bill, automatically that GST component will be added up, and you will be paying 100 plus 18, that is the cost of the mobile phone plus the GST amount in that. Now, as per Notification 8 2017, I'll just highlight that for your reference. In that entry number 9 2, it has mentioned that transportation of goods in a vessel, that is like from by ship from a place outside India up to the custom station of clearance in India will be covered in GST. And also it has mentioned that as per notification 10 2017, that the importer who is importing such goods will be termed as a recipient for the transaction. So considering the above, as per customs, the taxpayer has already paid tax on freight. He has already paid the GST component on the freight. Now, and also as per GST Act, the same taxpayer was in a way again liable to pay GST on RCM on the transportation charges. So in a way, what has happened, for one particular transaction, that is import of transportation service, a taxpayer was required to pay was the tax as per customs, and again as per GST. As per GST, the tax was paid by RCM, and as per customs, the same GST was paid because of as per assessable value concept. And just for reference purpose, in GST, these are the two notifications because of which this particular transaction is taken place. And in case of customs, there are valuation rules which clearly specifies that on whatsoever cost and insurance of freight, and on that custom duty will be charged, and if we also include the custom duty on that total amount, IGST will be calculated. In net conclusion, for one transportation of goods on the transportation charges, GST was paid twice, first time and second time. First time it was paid because of customs clearance, or you can also refer it to as valuation rules. And in case of second time, it was levied because of RCM notification 8 and 10 of 2017. Here the only one requirement which is to be very looked upon is that as per article 2, as per article once again as per article 265, no tax shall be levied or collected except by authority of law. And it is very basic that for one transaction, the same transaction cannot be taxed twice. Now this was the entire issue which has been under dispute for many years by multiple taxpayers, and people have been paying for the same transaction tax. For the same transaction they have been paying GST in both the sides, and also because of customs clearance, and they're also paying voluntarily because voluntarily in the 3B under RCM. This case was finally settled on 19th May 2022. That was the date of the Supreme Court final judgment, and post that CBSE has removed entry 9 on notification 8 and entry number 10 of notification number 10 2017. The same was omitted on 1st October 2023. I hope that I made the basics very clear, that my whole intent was to not go into technical, and just to make you understand that before Mohit Minerals, for this for one transaction, for one transportation charges with respect to import, for that transport or transaction, tax was charged twice. Now post Mohit Mineral judgment, for the same transaction, now the tax is just levied once. So that is the whole intent of me trying to explain, like, the exact requirement with respect to Mohit Mineral case law. Now adding up, there could be multiple pending issues which, or doubts which you will be going through. For instance, let's take, like, what about those cases where you have paid the tax earlier because of some scrutiny. Now, can you avail refund of that? Or what about the cases with respect to CF basis? Like Mohit Mineral covers CIF basis. Now there's one more concept, one more payment of like concept of CF. What about those cases? And what about cases where uh, you have paid the tax, but section 16(4) time limit for availing the ITC has expired? In those cases, which are still in those cases, we need clarity, and there is a lot of good amount of discussions which has already been done, since this is a very old case law, not very old, around 3 years, around 3 to 3.5 years. Prior case law is this one. And so yeah, there could be multiple doubts which you could be going through, and every doubt require a detailed discussion. But my intent was to just make sure you understand the basics, because as and when whatever doubt you're getting, there are multiple forums available in which these doubts have already been clarified in a good extent. There's no hard fact like if this happens, this is the solution. Everyone has their own interpretation with respect to whatsoever doubts you're getting in the right moment. But there are few uh, good experienced persons who have already made detailed videos with respect to these aspects. If you want further clarification, like you understood the basics. Before Mohit Minerals, one transaction, two tax. After Mohit Minerals, one transaction, one tax. If you understood this but you require more clarity, you can either go and read the judgments, and or you can go to TMI, tax management, or you can refer other website, tax guru, clear tax. And if you need anyone like someone explaining in YouTube, you can also refer Bimal Jain sir. He's a faculty from North. He has pretty good amount of experience from his end. You can refer his videos. He will give you a more detailed understanding of what and all issues are there, and what are the suggested solutions for that. Even in those cases, nothing is a hard fact solution like this is the final solution. Everything is based on whatsoever scrutiny you're getting, how you're able to defend yourself. That is the whole case. So I hope you were able to get the basic understanding. If yes, then great. Thanks.